Alright, welcome back. So in this post I want to talk about how real trading has to do with simple observation of market structures and understanding the principles behind them, and then seizing an opportunity however it may present itself. What we're going to do in particular in this CAD market is look at the market structure. And structuring a market is just taking all this noise so you can learn to see it. So for instance, you can structure it in relative swings and it becomes a little bit clearer to you. You can structure it with gaps. We can structure it with mountains and valleys. So today we're going to talk a little bit about mountains and valleys. See, that's a mountain. Mountains and valleys are pretty simple. Just kind of goes up, comes down. That's a mountain. See, it looks like a mountain. A valley is going to be the opposite. Okay, goes down. Now, this is just a structure. All right. Now, this structure will have components and a process, and that's what we're going to focus on today. The components and a process of a valley in particular. If we understand the process it goes through, we can make trade decisions along that process. That's the thing about any structure you want to use. Anything you've read in the technical analysis book, you don't know it until it's done. It has to go through a process. If you're looking at Head and Shoulders, it has to go through a process before you know it's a Head and Shoulders. Before that, it's something else. So everything goes in a process. If you're building a chair starts out with one leg, two legs, three legs, four legs, a seat, and back, and until you finish, it's not a chair. At one point, when it's just one leg, it could be a baseball bat. That's its point in the process. And the same thing with a mountain. It goes through a process. Before it becomes a mountain, it can be something else. So let's just begin to see this simply. And what I'm going to do is we're going to learn some market structure here, and we're going to learn a little bit of process. And then we're going to say take the model and apply it to the chart and see if you can spot the same easy opportunity I spotted. Alright, so we're going to do the process of a valley. And that's a particular structure. We're structuring the flow. It's going to have some basic principles it has to abide by. Once we understand some principles like contraction, expansion, and process, continued behavior, change in behavior, those principles can apply to valleys, to swings, to anything else. We can use them interchangeably. So let's look at this process. So in this process, we're going to have contraction. This is step one. We're going to call this a coil, right? That's how it manifests. That's how you're going to see it. It's a coil or a range. Step one. Okay. Like that. So we're going to do a valley, but it has to go in steps. So step two is going to be expansion. And that's going to manifest as a gap in some form. Okay, so over here, let's define. So we want to get this as objective as possible. Let's define gap. I'm going to make it a wide range bar gap. There's many types of gaps, but let's just, whoa, where'd everybody go? Get back over here. Wide range bar gap definition. And so that's going to be a wide range bar which happens, the definition of that is bigger than the last 3 bars from high to low. That has a space between the previous bar and the subsequent bar. Okay, so let's look. That's this. This is a gap. Okay, see, wide range bar. It's bigger than the last 3. And notice that there's a space between the previous bar and the subsequent bar. So that's going to be our definition of a gap. Now, what a gap is, it's part of the process of a valley. Right now it's a gap, so it's one of the components of a valley. And so that's step 2, okay? And then at some point, you'll see price, stall again. And from here, in this part of the process, price has a choice. So from here, it doesn't have to be a valley if it doesn't want to, okay? Right here, we can expand again, or we can expand up, right? We can expand, continue, see, expand, contract, or we can expand up. And so this would be and I'm just doing basic steps here. This would be a basic step 3. Expansion, which is a gap that reverses. Okay? And boom, we have a valley. See, it's shaped like a valley, a mountain. You just reverse the whole thing. All right, so now we understand something about the process. Remember, if it keeps going, it's not going to be a valley. So the minute it gaps, it's projecting a possible valley. All right, so from here, take my definition, look on the chart, and see if you can see a wide range bar gap. That looks something like this, right? Just look for the biggest, baddest, ugliest bar. See that? It's bigger than the last 3 bars, and you see this is all space, right? This is all space. And so we'll mark it the same way, and we'll go through the steps the same way. Contraction, expansion, and then we're stalling down here. I guess we could make that a step. Let's go ahead and make that a step. Step 3, contraction. And then step 4. I'm trying to break this down as simply as possible. All right, there's some sub-steps in there. All right, so we have, boom, this is projecting a valley. And we can also say down here that a gap projects a possible mountain or valley. That's its job, to fill the gap. We don't know if it will or not. Don't worry about the statistics. Who cares? We're just going to let price do its thing. So now, if you're watching price, and by the way, these come in relative form. You can see another gap here. See? And a smaller valley that goes through its thing and makes a smaller valley. So if we're sitting with a chart and we're mapped like this very simply, and we're at step 3, we don't know if this is going to expand down or back up. We have no idea. But look at price. This is very simple. Just look at price. Look at the sellers. Sellers, 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 sellers. These are the facts, Jack. Sellers, sellers. So we have no idea. Who cares about the statistics of a gap? We have no idea. Let price tell you. I have no idea. See, real trading is about spotting an opportunity and then creating a trade plan, seizing that opportunity. Right here, I have no idea. I can sell for an expansion, or I can just watch and see what it does. And sometimes just watching it like this, you begin to get bored. And then you get here and you say, oh, sellers. Ah, these guys just got beat. Now take a quick look. If you're understanding something about the process, you know we're now looking for a possible step 4. Possible, not for sure. You don't know until you know. But think about your own general trade plan you can create just from this simple possible valley structure and this simple line of sellers. Okay, now we're all cleaned up. Think about what we know and what we understand about process and everything else. We know this is in the process of possibly filling that, and so from here it's not hard to create and make observations that, oh, they're not going down, they look like they're going up, they just busted the line of sellers. So it's easy to see a possible swing and a run to make a valley. You come in here, you know, you put your stops, you look, you see, oh, maybe I got 3 to 1 or so. You can make 80 or so ticks from that. Or when it gets there, if price shows you, you can sell the valley. We don't know yet. But this is as simple as trading can be here, just because we have the ability to map out some structure and see some process, right? To see this is real time trading. Not I've memorized the pattern trading. This is real, not the lines telling me what to do. Not I have squiggly lines with little green and red arrows telling me what to do trade. This is real. Hey, I had no idea this would happen. I see opportunity. I can get long, I take my risk. I don't know for sure, but I can take my risk on a very educated, intelligent trade plan. And my obvious target would be that, to finish the process of a valley. Now, of course, you can play for going through the valley. You can manage stops. There's a lot of things you can do. There's no dogma here. See, trading, you take the principles, with process is one of them, and you can apply them to anything, whether it's lines or swings or anything else. It has nothing to do with something telling you what to do. That's slavery. Doesn't work either. Not in a moving environment, no matter how many statistics you have. no matter how many fancy lines you got. You don't need to be fancy to make money from that. That's pragmatic. So I just wanted to do a little post on how we learned something about structures, and the process they go through, and how you don't always get a quickie zoom retest up here, but this time we did, and it gave us room to come up here and make a valley. And we also learned about making a gap and everything else. And so that's trading. You spot an opportunity, you take it. By understanding a few ways to structure a market and understanding the principles that underlie any method, it's then a matter of simply looking and waiting for opportunity. I know that's a scarier way to go about it than to have something tell you what to do, but it's the only way. If you want to go chasing systems, keep doing it until you're worn out. Nothing works. You work or you don't work. And so trading is a matter of seeing and then risking and then doing a trade. All right. Thank you. We'll put this up and we'll look at other methods and things as they come along.